June 8, 1836, The Hermitage, Tennessee. President Andrew Jackson lies on his deathbed, surrounded by friends, family, and political allies. His body is failing, but his mind remains sharp. As those gathered lean in to hear his final words, the old general speaks with surprising strength. "I killed the bank." He wasn't talking about robbery. He wasn't confessing to a crime. He was talking about the second bank of the United States, America's central bank. An institution more powerful than Congress, more influential than the presidency itself. And Andrew Jackson did kill it. He destroyed what many believed was indestructible. But here's what they don't teach you in school. The Federal Reserve wasn't the first attempt to create a central bank in America. It wasn't even the second or third. It was the fourth attempt. The first three were destroyed, rejected, dismantled by presidents and patriots who understood exactly what a central bank represented, the end of American financial independence. So what changed? Why did the fourth attempt succeed when the previous three failed so spectacularly? The answer will reveal the greatest financial conspiracy in American history. And understanding this conspiracy is the key to understanding everything that came after. The world wars, the Great Depression, the 2008 financial crisis, and the economic system we live under today. For over 130 years, from 1783 to 1913, America fought a relentless battle against central banking. This wasn't a fringe movement. Presidents, senators, congressmen, and ordinary citizens understood one fundamental truth. Whoever controls the money supply controls the nation. Control the currency, and you control the government. Control credit, and you control the economy. 3 separate times, powerful banking interests tried to establish a central bank. And 3 separate times, the American people said no, until 1913. What happened in 1913 wasn't just the creation of another government agency. It was the culmination of a 140-year war for control of American money. And the bankers finally won. This is the story of those first 3 battles. The story of the heroes who fought against financial tyranny. And most importantly, this is the story of why understanding these battles is the key to understanding what happened at Jekyll Island and why we live today in a system of perpetual, unpayable debt. Our story begins in 1790, just 7 years after the Revolutionary War ended. America is drowning in debt. The war for independence came with a price tag, $75 million, a staggering sum for the time. The Continental Congress had printed money to fund the war, and that currency had become so worthless that the phrase, "not worth a continental," entered the American lexicon. The states owed money. The federal government owed money. Soldiers hadn't been paid. Foreign creditors were demanding payment. The economic situation was dire. Enter Alexander Hamilton, the first Secretary of the Treasury. His solution? Create a central bank modeled directly after the Bank of England. On the surface, it sounded reasonable, even necessary. But there was one man who saw through this scheme immediately. Thomas Jefferson, the Secretary of State. Jefferson understood something crucial. He knew that the Bank of England had been created in 1694 by private bankers who wanted to loan money to the British government at interest. It wasn't a government institution. It was a private monopoly that profited from public debt. A system deliberately designed to create permanent, perpetual debt. The more the government borrowed, the richer the bankers became. And Hamilton wanted to bring that exact same model to America. This was the fundamental betrayal. America had just fought a war to escape the financial control of the British Empire. And now, barely 7 years later, Hamilton was proposing to recreate the very financial system that had helped enslave the colonies. Hamilton argued that America needed a central bank to stabilize currencies, manage the national debt, and establish credit with foreign nations. Without it, he warned, America would descend into chaos. Jefferson warned that a central bank would concentrate unaccountable power in the hands of a wealthy elite, create a new aristocracy based on control of money, and inevitably corrupt the republic. He argued the Constitution gave no authority to create such an institution. Congress, swayed by Hamilton and the economic crisis, sided with Hamilton. In February 1791, the first Bank of the United States was chartered. But here's the critical detail. The bank was given a 20-year charter, not permanent, a test period. And here's the even more critical detail. The first bank was not a government institution. The federal government held only 20% of the shares. The remaining 80%? Private bankers and wealthy investors, many of them foreign nationals, including British citizens. Think about that. America had just fought a war against Britain, and now British investors owned shares in America's central bank. The bank opened with capital of $10 million. It had the power to issue paper currency and control credit throughout the nation, and almost immediately, it did exactly what Jefferson predicted. It began issuing paper currency far in excess of its gold and silver reserves. It controlled credit, deciding which businesses received loans. It influenced elections by providing loans to politicians who supported it and denying credit to opponents. Foreign shareholders influenced American policy, but Jefferson and his allies didn't give up. They spent 20 years methodically exposing the bank's corruption, documenting its foreign ownership, revealing its manipulation, and building public opposition. They played the long game, and it worked. In 1811, when the bank's charter came up for renewal, the vote was incredibly close. Vice President George Clinton cast the tie-breaking vote. The charter was denied. The first bank of the United States was dead. The first attempt to establish central banking in America had been defeated. Score: Jefferson 1, bankers 0. But the bankers weren't finished. Just 5 years later, in 1816, they tried again. And this time, they had a better excuse. The War of 1812 had just ended, creating financial chaos. State banks had proliferated wildly. Each state had banks issuing their own currencies, hundreds of different banknotes circulating, many worthless. Inflation was rampant. The economic situation was genuinely unstable. The solution proposed? Another central bank. And this time, even many who opposed the first bank reluctantly agreed. Perhaps, they reasoned, a central bank was a necessary evil. The Second Bank of the United States was chartered in 1816 with bipartisan support. It was bigger, better funded, more powerful. And once again, 80% private shareholders, 20% government. For a while, everything seemed fine. The economy stabilized. Different state currencies were brought under control. The bank's supporters claimed total victory. But corruption takes time to become visible. And then, in 1828, came Andrew Jackson. Jackson was unlike any president America had seen. He was a genuine war hero who defeated the British at New Orleans, a man of the frontier, rough and direct. He had survived multiple duels, carried bullets in his body, and was absolutely fearless. But most importantly, Andrew Jackson hated banks with a passion. Why? Earlier in his life, Jackson had been relatively wealthy. He had accepted banknotes as payment for goods. And then those banks failed, and Jackson had been left holding worthless paper. He had nearly been bankrupted. From that experience, Jackson understood. Paper money, unbacked by gold or silver, is not real wealth. It's a promise, and promises can be broken. Jackson saw the second bank for what it was, the most powerful tool of extraction and control in American history. In 1828, Jackson ran for president on one central platform: kill the bank. The bank's president was Nicholas Biddle, one of the most powerful men in America. Philadelphia aristocracy, educated at the finest schools, sophisticated, brilliant, utterly confident. Biddle controlled the flow of money through the entire American economy. He could make or break businesses. He could create prosperity or recession. Newspapers depended on bank loans and rarely criticized it. Politicians feared Biddle because he could destroy their local economies. Nicholas Biddle believed himself untouchable, beyond the reach of any president. He was catastrophically wrong. In 1832, 4 years before the charter was set to expire, Biddle made his move. He applied for early renewal. It was a calculated trap. The renewal would pass Congress, then land on Jackson's desk during an election year. If Jackson vetoed it, Biddle believed it would cost him the election. Veto and lose, or accept renewal and abandon principles. Jackson did something Biddle never anticipated. He vetoed it immediately and turned the veto into the centerpiece of his re-election campaign. Jackson's veto message is one of the most important documents in American financial history. He wrote that it is to be regretted that the rich and powerful too often bend the axe of government to their selfish purposes. He wrote that when laws make the rich richer and the potent more powerful, the humble members of society have a right to complain. Jackson exposed the bank for what it was, not a neutral institution, but a tool for the wealthy to extract wealth from the productive classes. The people loved it. Jackson won re-election in a landslide. The bank renewal was dead. But Nicholas Biddle wasn't done. He would punish America for rejecting him. Biddle used the bank's power to deliberately contract credit across the entire country. He called in loans. He refused new credit. He created an artificial recession. Businesses couldn't get loans. Unemployment spiked. People suffered. Biddle was explicit. His plan was to create enough economic pain that people would beg Congress to override Jackson's veto. He was holding the entire American economy hostage. It nearly worked. Businessmen pleaded with Jackson to compromise. Politicians warned him he was destroying the economy. The pressure was enormous. Jackson's response has become legendary. "The bank is trying to kill me, but I will kill it." Jackson ordered his Treasury Secretary to remove all federal deposits from the second bank and distribute them to state banks. When his Treasury Secretary refused, Jackson fired him. When the second refused, Jackson fired him too. The third Treasury Secretary followed Jackson's orders. Without federal deposits, the second bank lost its power. Biddle's artificial recession backfired, making him appear tyrannical. Public opinion turned against the bank. When the bank's charter expired in 1836, Biddle didn't even try to renew it. The second bank of the United States died. Andrew Jackson had killed the second central bank in America. Score: the people 2, bankers 0. On his deathbed, Jackson's greatest pride wasn't his military victories or his presidency. It was that he had killed the bank, because he knew the bankers would try again. For the next 77 years, nearly 8 decades, America operated without a central bank. This period is called the free banking era. Was it perfect? Absolutely not. State banks issued currencies, and yes, some failed. There were financial panics in 1837, 1857, 1873, and 1893. People lost money. Businesses went bankrupt. There was genuine hardship. But here's what they deliberately don't tell you. None of these panics destroyed the entire banking system. They were regional, limited, and relatively brief. The economy recovered naturally, without massive intervention, without taxpayer bailouts, without printing trillions of dollars. During this free banking era, America experienced the greatest period of economic growth and rising living standards in human history. The railroads were built. The telegraph connected the coasts. Electricity, the telephone, the automobile were invented. Oil was discovered and refined. Steel production made America an industrial powerhouse. The standard of living increased more in those 77 years than in the previous 500 years of human history. But the banking interests needed something bigger. They needed a crisis so severe that Americans would abandon the wisdom of Jefferson and Jackson. They got their chance in 1907, and many historians believe they didn't just get lucky. They created that chance. October 1907. A scheme to corner the market on copper fails spectacularly. When it collapsed, it was revealed that the Knickerbocker Trust Company, one of the largest financial institutions in New York, was deeply involved. Within 48 hours, there were lines outside the Knickerbocker that stretched for blocks. Depositors wanted their money. The Knickerbocker Trust failed, and panic spread like wildfire. Within days, people lined up outside banks all over New York, all over the Northeast, demanding their deposits. 25 banks failed in a single week. Suicides multiplied. The stock market crashed. Credit seized up. The economy ground to a halt. The government had no central bank. President Theodore Roosevelt was essentially powerless to stop the panic through monetary policy. And then appeared John Pierpont Morgan, J.P. Morgan. Morgan was the most powerful banker in America, possibly the most powerful private citizen. His bank was the most influential financial institution in the nation. Morgan had connections to the Rothschilds in Europe, to the British financial establishment, to every major American industry. Morgan was 70 years old, but he took personal control. He gathered the nation's leading bankers to his private library on Madison Avenue. And according to accounts, he literally locked the doors. No one was leaving until the crisis was solved. For 3 weeks, Morgan orchestrated the rescue of the American financial system. He decided which banks would live and which would die. He forced healthy banks to absorb weak ones. He strong-armed John D. Rockefeller into depositing millions to restore confidence. And it worked. Morgan's intervention ended the crisis. Morgan was hailed as the man who saved America. But many thoughtful people asked an uncomfortable question. Should one man have that much power? Should the fate of the entire American economy rest in the hands of a single private banker? Senator Nelson Aldrich, father-in-law of John D. Rockefeller, Jr., had an idea. What if we gave that power to a system? What if we created a central bank that could do what Morgan did? Inject liquidity, coordinate banks, rescue failing institutions, but permanently, legally, with government backing. It sounded reasonable. It sounded like a solution. And that's exactly how they sold it to the American people. The bankers finally had their opportunity, their crisis, their excuse. 3 years after the Panic of 1907, in November 1910, a secret meeting took place on Jekyll Island, a private resort off the coast of Georgia. The attendees traveled under assumed names, pretended not to know each other, and were forbidden from using last names during discussions. Who attended? Senator Nelson Aldrich, Frank Vanderlip, president of National City Bank, the largest bank in America, Henry Davison, senior partner at J.P. Morgan, Charles Norton, president of First National Bank, Benjamin Strong, who would later become the first head of the Federal Reserve, and Paul Warburg, partner at Kuhn, Loeb and Company, and representative of the Rothschild banking interests in Europe. These men, collectively, represented approximately 1/4 of the world's entire wealth. And they were there, in secret, to write the blueprint for the Federal Reserve System. They spent 9 days on Jekyll Island. And when they emerged, they had created the plan that would become the Federal Reserve Act. But they had learned from history. This time, they wouldn't call it a central bank. The words central bank had been poisoned by Jefferson and Jackson. Americans had been conditioned to reject central banking, so they called it the Federal Reserve System. Make it sound like a government institution, part of the federal government. Make it sound like multiple regional banks, not one central authority. Make it sound decentralized, democratic, accountable. It was brilliant marketing, and it was deliberately deceptive. The Federal Reserve is not federal. It's privately owned by banks, and there's no reserve. It can print money with no backing whatsoever. This time, they would pass it during Christmas break when most congressmen were home with their families, when opposition couldn't be organized. And this time, it would work. So why did the Federal Reserve succeed when 3 previous attempts had failed? What changed between 1836 and 1913? The answer is a masterclass in propaganda, crisis manipulation, and political deception. Reason 1. Marketing and language. They learned from their mistakes. The Federal Reserve sounds like a government agency. Most Americans even today believe it's part of the federal government. It's not. The Federal Reserve is a private corporation owned by private banks. It's as federal as Federal Express. The name was deliberately chosen to deceive. They also called it a system, not a bank. Multiple regional banks sounded decentralized and democratic. But that was an illusion. Real power in the Federal Reserve System is concentrated in the Federal Reserve Board and the Federal Reserve Bank of New York, controlled by the largest commercial banks. Reason 2. The crisis. The Panic of 1907 was the perfect justification. It was recent enough that people remembered the fear, the bank runs, the devastation. And it was severe enough that people wanted to make sure it never happened again. The bankers used that fear masterfully. They promised that with a central bank, such panics would be prevented. The economy would be stable, managed scientifically by experts. It was a false promise, as we would discover in 1929. But in 1913, people wanted to believe it. Reason 3. Secrecy and deception. The Jekyll Island meeting was kept secret from the American people for over 20 years. The first full account wasn't published until 1930 by Forbes magazine publisher B.C. Forbes. By the time the truth came out, that the Federal Reserve had been literally designed by the very bankers who would profit from it, it was too late. The Federal Reserve was already established, already powerful, already too big to challenge. If the American people had known in 1913 that the Federal Reserve Act had been written by J.P. Morgan's partners and the Rothschilds' representatives in a secret meeting on a private island, there's no way it would have passed Congress. But the secrecy worked. Reason 4. Political manipulation and timing. The Federal Reserve Act was passed on December 23, 1913, 2 days before Christmas, late in the evening, when most congressmen had already left Washington for the holiday. Many who voted for it had literally not read the bill. It was over 1,500 pages long, filled with complex financial language, presented just days before the vote. This wasn't an accident. It was deliberate strategy. They waited until opposition could not be organized. They waited until the public wasn't paying attention. Congressman Charles Lindbergh Sr. warned that this act would create the most gigantic trust on earth, and that when the president signed it, the invisible government of the monetary power would be legalized. He was ignored. Reason 5. Academic and media capture. By 1913, the banking interests had spent years cultivating allies in academia and journalism. They funded economic departments at major universities. They created think tanks that produced papers explaining why central banking was modern and scientific. They cultivated relationships with journalists. The major newspapers were generally supportive of the Federal Reserve, or at least not hostile. The intellectual climate had been prepared. Central banking was presented as the modern, progressive, scientific solution. Opposition to it was portrayed as backwards, ignorant. Reason 6. The promise of stability and prosperity. Americans were told the Federal Reserve would prevent panics and depressions. It would smooth out the business cycle. It would protect their savings and jobs. Experts would manage the money supply scientifically for the benefit of all. It was a comforting promise. That promise lasted exactly 16 years. In 1929, just 16 years after the Federal Reserve was created, its policies created the Great Depression, the worst economic collapse in American history. Unemployment reached 25%. Banks failed by the thousands. People starved. But by then, it was too late. The Federal Reserve was entrenched. Instead of blaming the Federal Reserve for the Depression, the authorities blamed the free market, blamed capitalism, blamed everything except the institution that had actually caused the crisis. Jefferson and Jackson had understood the fundamental danger. A central bank is not a tool for economic stability. It's a tool for control. When you control the money supply, when you can create money from nothing and decide who gets access to that money, you control the government, because the government depends on you for funding. You control businesses, because businesses depend on you for credit. You control the people because people depend on the value of the currency. That control was exactly what the bankers wanted. And in 1913, after 140 years of trying, they finally got it. 3 times across 130 years, from 1791 to 1913, America rejected central banking. 3 times the people said no to the concentration of financial power in private hands. The first bank was defeated in 1811. The second bank was defeated in 1836 through Andrew Jackson's will. And for 77 years after that, America prospered without a central bank, experiencing the greatest economic growth in human history. But the 4th time, the bankers learned their lessons. They used crisis to create fear. They used secrecy to hide their intentions. They used propaganda to shape opinion. They used language to disguise a private central bank as a public institution. They used political manipulation to pass legislation when opposition couldn't be organized. And on December 23, 1913, late at night, 2 days before Christmas, America got its 4th attempt at a central bank. And this time, it didn't get a 20-year charter. It got permanence. Andrew Jackson's dying words were, "I killed the bank." It was his proudest achievement. He killed the bank because he understood what it represented. The end of financial independence, the beginning of a system where money itself would be used as a tool of control. He did kill the bank. He destroyed the second bank of the United States, and it stayed dead for 77 years. But it came back. It came back with a new name, a new disguise, and new protections. And this time, it came back stronger, smarter, and immortal. The Federal Reserve has now existed for over 110 years. In that time, it has presided over the Great Depression, countless recessions, endless inflation that has destroyed over 95% of the dollar's purchasing power, and multiple financial crises, including 2008, each of which required even more power to be given to the Fed to solve crises that the Fed itself had created. The system Jefferson warned against in 1791 and Jackson destroyed in 1836 is now so entrenched, so powerful, that most people cannot even imagine an alternative. We've been taught that the Federal Reserve is necessary, that without it the economy would collapse, that opposition to it is fringe or dangerous. But that's what they want you to believe. Because if enough people understood the truth, that the Federal Reserve is a private banking cartel that profits from public debt, that it was created through deception and has operated through crisis after crisis that it helped create, then maybe, just maybe, the fifth time would be different. The story doesn't end with the creation of the Federal Reserve. That was just the beginning. Once you control the money, you control everything. The government, the economy, foreign policy, war, and peace. And once you understand that, you'll understand the world you live in today. This is the shadow economy. Hit subscribe, because the story we're telling is far from over, and the next chapters are even more disturbing than what we've covered today. The real conspiracy isn't that these things happened. The real conspiracy is that you were never taught about them.